Hello friends and welcome to next video lesson on bank proportion study. This is regarding the types of accounts. Types of accounts. The first type is savings account. So savings account can be opened in the name of individuals or non-profit organizations. Organizations for which saving account can be opened, these accounts cannot be used for business purpose. As per RBI directives, banks cannot open savings bank account in the name of government department or bodies who for performance of their functions depend on budgetary allocations such as government departments, municipal corporations or committees, panchayat samitis, state housing boards, state electricity board, water and sewerage boards. Organizations for which saving account can be opened. Limited companies. Savings account can be opened for limited companies registered at non-profit or limited companies like Chamber of Commerce, Indian Bank Association, societies registered under Societies Registration Act 1860, Khadi and Village Industries Board, Agriculture Produce Market Committees, and District Rural Development Agency, that is DRDA. So friends, whenever these full forms are there, I request all of you to kindly take note of these also, because these are sometimes asked. They will give you what is the full form, so then you will have to take the correct option. Interest rate on saving account was deregulated by RBI on 25th October 2011. Banks will decide interest rate on savings account themselves. So banks decide. For saving deposits up to rupees 1 lakh, bank will pay uniform interest rate. Up to 1 lakh, bank will pay uniform interest rate, and they can pay differential interest rate on saving deposits of more than 1 lakh rupees. With effect from 1st April 2010, interest rate on saving bank is payable on daily product basis. It should be credited quarterly or at earlier intervals, but they are calculated on a daily basis and credited quarterly or earlier interval. Next is basic saving bank deposit accounts. So these are the accounts which were opened during Pradhan Mantri Jan Dhan Yojana. These accounts shall not have the requirement of any minimum balance. There will be no limit on the number of deposits in a month or balance in the account or maximum credits in a financial year or amount of withdrawal in a month. The only limitation is it will allow minimum 4 withdrawals per month. Bank should allow minimum 4 withdrawals per month in a month. So minimum 4 withdrawal bank should allow. Facility of ATM card or ATM cum debit card will be provided without any charges. Account will be subject to KYC guidelines unless it is a small account. If a customer has any other existing saving bank deposit account in that bank, she will have to be required to close it within 30 days from the date of opening basic saving bank deposit account. BSBDA can be opened only in one bank and bank has to obtain declaration in this regard. Inoperative account. So what is an inoperative account? Bank should make an annual review of accounts in which there are no operations, no credit or debit other than crediting of periodic interest or debiting of service charges. For more than 1 year, the bank may approach the customer and inform them in writing that there has been no operation in their account and ascertain the reason for the same. So if there are no operation for more than 1 year, then bank should inform. A savings as well as current account should be treated as inoperative or dormant if there are no transactions in the account for a period of over 2 years. In case any reply is given by the account holder giving the reasons for not operating the account, bank should continue classifying the same as an operative account for 1 more year, within which period the account holder may be requested to operate the account. For the purpose of classifying an account as inoperative, both the type of transaction, debit as well as credit transactions induced at the instance of customer as well as third party should be considered. However, the service charges levied by the bank or interest credited by the bank should not be considered. Where the customer has given a mandate for crediting the interest on fixed deposit account or dividend on shares to the savings bank account, crediting the interest to the saving bank account as per the mandate of the customer should be treated as a customer induced transaction. Such accounts should be treated as operative as long as the interest on fixed deposit account or dividend on shares is credited to the savings bank account. Operation in inoperative account may be allowed after due diligence as per risk category of the customer. Due diligence would mean ensuring genuineness of the transaction, verification of signature and identity, etc. There should not be any charge for activation of inoperative account. Bank should allot a different product code in their CBS to accounts opened by the banks for beneficiaries under various central state government schemes, including scholarship schemes for students, so that the stipulation of inoperative and dormant account due to non-operation does not apply. Term deposit. Minimum period is as per RBI is 7 days. Maximum period as per IBA is 10 years. So minimum period as per RBI is 7 days and IBA it is 10 years. However, term deposit in the name of the minor or as per court orders can be operated for more than 10 years. Bulk deposit means a single term deposit of rupees 2 crore and above. If it is above 2 crore, then it is a bulk deposit. In case of regional rural banks, this amount is 15 lakh. Interest rate on term deposit is deregulated and is decided by Board of Directors of the bank on Asset Liability Management Committee of the bank. Bank can pay differential interest rate on single deposit of rupees 2 crore and above and 15 lakh in case of regional rural banks, that is RRB. Banks can also offer differential interest rate based on whether the term deposit are with or without premature withdrawal facility. Bank can refuse premature payment of bulk deposits. So this is important. Bank can even refuse premature payment of bulk deposits. In case of premature payment of FDR, penalty will be decided by the bank. However, penalty cannot be charged in case of premature payment in case of death of depositor. If due date of term deposit is on a holiday, bank will make payment on next working day or thereafter and will pay the interest for the holiday to the depositor at contracted rate irrespective of when the payment is taken. If a term deposit matures and proceeds are unpaid, the amount left unclaimed with the bank shall attract rate of interest as applicable to savings bank account or the contracted rate of interest on the matured term deposit, whichever is lower. 2 can request for addition. Depositor can request for addition or deletion of names in the deposit, but at least one of the original depositor must remain. If loan raised against term deposit, name of the minor can be added only when loan has been adjusted. As per section 269 of Income Tax Act, if the principal plus interest of term deposit is rupees 20,000 or above, the payment should be made through credit to the account or issuing account pay check or demand draft. It should not be paid in cash. In case bank pays such term deposit in cash, penalty will be equal to the amount paid. Similarly, payment of interest of rupees 10,000 and above should not be made in cash. In case of death of depositor, interest for overdue period will be paid at saving rate if depositor died after maturity date. If the depositor died before maturity date of FDR, interest for overdue period will be paid at FD rate as on the date of maturity for the period overdue amount remained with the bank. Banks have the discretion to disallow premature withdrawal of a term deposit in respect of bulk deposit of 50 lakh and above of all depositors, including deposits of individuals and HUFs. Depositors Education and Awareness Fund Scheme, that is DEF, DEAF. So this is by RBI. So as per section 26A of the Banking Regulation Act, RBI is empowered to establish the Depositor Education and Awareness Fund. The amount to the credit of any account in India with any bank which has not been operated for a period of 10 years or any deposit or any amount remaining unclaimed for more than 10 years shall be credited to the fund. The fund shall be utilized for promotion of depositors' interest. RBI has prepared Depositor Education Awareness Fund Scheme 2014. As per the scheme, banks shall transfer the funds to the amount becoming due in each calendar month, proceeds of the inoperative account and balances remaining unclaimed for 10 years or more, and the interest accrued on interest-bearing account till the date of transfer on the last working day of the subsequent month. So every monthly this transaction takes place. Whatever the accounts falling in that month are becoming due for more than 10 years, then the amount is transferred to RBI and it is transferred by the last working day of the subsequent month. For example, for March, the amount would be transferred by the last date of April. The rate of interest payable by banks to depositor claimants on unclaimed interest bearing deposit amount transferred to the fund shall be 3% simple interest per annum with effect from May 2021. Interest payable on interest bearing deposit transferred to RBI will be 4% per annum up to June 30, 2018. So this is a list that in this period it will be 4%, 3.5% with effect from July 18 up to May 21, and it is 3% with effect from 11 May 2021 till the time of payment to the depositor or claimant. All such unclaimed liabilities where the amount has been transferred to DEF may be reflected as contingent liability others. So these are shown as contingent liability others item for which the bank is contingent liable under Schedule 12 of the annual financial statements. The depositor would, however, entitled to claim from the bank her deposit or any other unclaimed amount to or operate her account after expiry of 10 years, even after such amount has been transferred to the fund. The bank would be liable to pay the amount to the depositor claimant and claim refund of such amount from the DEF fund through communication with RBI. Where refund has been claimed from the fund, bank shall preserve record, document in respect of such account and transaction for a period of at least 5 years from the date of refund from the fund. For at least 5 years, this transaction details should be kept. In case of foreign currency denominated deposit where a fixed maturity date remains inoperative for a period of 3 years. 3 years from the date of maturity. At the end of the third year, the authorized bank shall convert the balances lying in the foreign currency denominated into Indian rupee at the exchange rate prevailing as on that date. So in a foreign currency, if this amount is there and it has been operative for a period of 3 years, then from the date of maturity, at the end of the third year, the bank will convert the amount from foreign currency to Indian rupees at the exchange rate which was prevailing on that date. In case of foreign currency denominated deposit with no fixed maturity period, if the deposit remains inoperative for a period of 3 years, authorized bank shall, after giving a 3-month notice to the depositor at his last known address and available with, convert the deposit from the foreign currency in which it is denominated to Indian rupee at the end of the notice period at the prevailing exchange rate. So if there is no fixed maturity period, then also after 3 years and after giving a 3-month notice, after 3 years and 3-month notice, the bank will be able to convert the foreign currency into Indian rupee. So that is all regarding the types of account and DEF fund scheme. Thank you so much for attending this video lesson.